China showing its military might, firing rockets toward Taiwan, sending assault ships and bombers to the region for the second day in a row. The country seeming to send a message to any nation that looks to block Beijing from claiming control of the region. So, could geopolitical unrest in China be maybe the big wild card for the global markets? For more, let's welcome in Managing Director Shehzad Qazi, joining us now on set. Shehzad, thank you very much for coming back. You just heard this sort of semi-scary conversation about OpenAI and what were to happen. I think China's probably the other massive variable. We had a good year this year. Are you expecting a good year for Chinese equities, anything related to China in 26?
I think the uncertainty will certainly carry on. I think equities did a lot better than we would have predicted at the beginning of the year, considering the trade war predominantly. Now, next year, the economy, again, will be reliant on Beijing stepping in to perhaps provide stimulus on the consumer side, continuing to provide stimulus to stabilize the property market if they can get there. So lots of open questions about economic growth. I think geopolitics, in the first few months of the year, you can rest easy because of the Xi-Trump summit. But after that, once again, we may be back, in a place where instability continues to just go back up.
Yeah, and you've got more saber rattling, in some cases, literal saber rattling around the Taiwan issue. Let's hope and pray nothing happens. If something were to happen, I know you got your December data report. I want to get to that in a second. But if something were to happen militarily, what would happen to China's markets? What would happen to the U.S. markets?
Well, look, I mean, that would be catastrophic, I think, for markets across the world. I mean, certainly here and certainly in China. I think a lot of the question for folks is, what will the administration here do? Because I don't think everybody is convinced, and they shouldn't be, that the current occupiers of the White House, the president and his team really firmly believe that we have to go as far as needed all the way to protect and defend Taiwan. I think there's a big question mark on there.
All right, let's go to the December flash data report for the China Beige Book. What are you seeing? There's so many questions around the Chinese economy because it just seems to be in a constant state of stimulus.
Look, the consensus narrative has been very, very negative on China. The idea that the Chinese economy is slowing down. What we've been saying month after month is that actually, if you look at it, the economy is doing just fine compared to a year ago. It's growing over, compared to a year ago. At the end of the year, there was in December a bit of a slowdown. It's nothing alarming. I think China released extremely positive data in the earlier part of the year when they were under pressure because of the tariffs, when the political threat and pressure was gone. They were much more comfortable releasing the negative news, and that's what's happened here.
So when you give us a cheat sheet, because I find this very interesting, but you're the expert on it. So when you look for things, right, we know about the property market, we know about stimulus. What are the canaries in the coal mine that you look for that will let us know that China could be on the precipice of something bigger? Because all this other stuff, dancing around it, whether it's 8% growth, now 5% growth, they're going to 4% growth. We can factor that in. We can trade around that. But what's the cataclysmic stuff, if anything, that you look for?
The big one has to be consumer spending. Chinese consumers are going to be very, very cautious unless policy changes and unless they do structural reforms to eventually move towards a consumption-driven economy. So are we going to get another year where they do some trade-in subsidies and this and that to boost the GDP? Or are we going to get a year where you see Beijing say we are finally going to start working towards actual structural changes to the economy? I am not very, very positive at all on the latter. I think they love the fact that they're an export powerhouse. They love relying on the manufacturing sector, keeping the world reliant on them. I think that's what they're going to continue doing.